Good morning. Good morning. It's a beautiful Monday morning. We are going to get started with some live trading. Outside, it's rainy. It's not the prettiest day today. I usually like seeing the sun out. No sun today. So we're going to be inside. We're going to get started here. We're going to go over, look at the economic calendar for today, get an idea what's going on. And then we're going to start with a higher time frame analysis and then work our way down into figuring out what our bias and what our narrative for the day is going to be. It's what I really focus on every single morning, and it's going to be a good one. So give me a thumbs up if you're on here and you can hear me clearly. Just want to make sure that I am not muted, because Friday I ended up trading for about 20 minutes and I wasn't even live. So it's that would be appreciated. We'll get that and then we'll get started. All right, I think I got a like here, so it looks like somebody heard me. Let's go get ahead and get started. When I am looking at my calendar, when I'm trying to go figure out what is going on for the week. By the way, if just real quick, I'm liking this breaker right here. I'm keeping an eye on it. This is one of the models that I trade. We got a lot going on here. We just ran some equal lows. We're at the new week opening gap. I'm just want to see how it reacts here. If you look on the 5-minute, we got this nice 5-minute fair value gap. Price is running into right now. So just want to see what's going to happen with that here as we come into the open here in about 7 minutes. But we're going to jump screens over here. Right here is what I type in, FX calendar. If you go to the FX calendar, select factory or Forex factory. This is where I get all my news. This is this week's news, and as you can see, we have 10 a.m. news. Okay, so 10 a.m. news, meaning I'm really not going to want to take anything prior to 10 a.m. New York Standard Time. I will probably wait unless something becomes so blatantly obvious for me to take. That's the only situation that I would take something. You can see the rest of the week on here. We have news 10 a.m. on Tuesday. Wednesday, we have 8:15 news and 10 a.m. news. So it looks like it's going to be a full week. And then 4th of July is Thursday. And then Friday, we have non-farm payroll, which is very interesting because we have a holiday right in between there. So it's going to be a very interesting week. Mondays in itself tend to be a little choppy, in my opinion, or it's the accumulation period for the rest of the week. So we're going to see what's going to happen with that today. Let's jump back to the screen and see what's happening. And then we're going to really work our way down from a higher time frame to a lower time frame and see what the market really wants to do. Let's see who we got on here. Good morning, Peter. Good morning, Statistics. Masto, Sailing Suite. Nice to have you guys this morning. I assumed I was going to have a few more viewers from my last video, so thanks for joining me. Hopefully you guys enjoyed today. My purpose for my live streaming, just to get that out there, is really to help. I want to help people. I want to help the body of Christ, believers, become independent, to be able to quit their jobs, not to be dependent on an employer, to be able to make their own living, their own income, and that's what we're going to be focusing on. Here is education. This is not an alert service. We don't do that. I'm not a financial advisor. This is going to be education. You probably will see executions done. All my executions are going to be off screen though. I am trading a micro account. I have about 8 micro accounts that I'm copying on. And Friday, I was 1 for 3. I had 2 losses, ended up closing out the day and made some of that back later in the day. But I'm going to start with half size today. I want to make sure I got my confidence, don't want to oversize. If you go back and you watch the video that I posted on Matt and you read through the comments, you'll see all the people that posted on how they've blown their accounts by oversizing. And we ain't going to do that. No. We're going to get the confidence back. We're going to do it right. We're going to do it right. We're going to manage our risk appropriately. And today is one of those days where you're just not 100% sure what today's going to bring. We got news at 10, so we for sure want to wait until 10 o'clock because typically before news, you get choppy price action. Sometimes, not always, but I would say that's the narrative mostly is choppy price action. So, we got 3 minutes till open. First thing I want to do, it's July 1st. We have to start with a higher time frame. This is the monthly. We're not going to see much on the monthly, but it is the place we want to start. So last month we made all-time highs. And honestly, if you look at down here back in October we made a low and we didn't make another high. After we made the lower low, we just reversed. So after we made this high, we made a high here, but we closed relatively low. We made this higher high on the monthly. We have a lot of space from this high to this low. So the monthly is not telling me much. So let's drop down to the weekly and see what the weekly has to offer, okay? So we have this fair value gap sitting right here. This fair value gap technically goes up to here. This is the original fair value gap. This is the original fair value gap on the weekly time frame. And last week we purged it and we closed above it. Okay? Now that we've purged it, I want to drop this weekly time frame down to the low because I want to know where we're sitting as far as unfilled weekly fair value gaps. So we have this weekly fair value gap that the rest of this is unfilled, and I just want to know where it's at. We made a lower low from this high 2 weeks ago, and when we purged into, this is interesting, when we purged into this weekly fair value gap, you should see a higher high made. Let's look here. We have a fair value gap here. After we went into it, what did we do? We made a higher high. We moved higher, okay? So I'm curious if this week, if we want to make a higher high or not. We have a week full of news. It's a full week of news with a holiday in between it. It's going to be very intriguing on what price wants to do. I still have my eye over here, guys. We are 20 seconds away from open. And I have this breaker sitting right here. I just want to see how it reacts to it. Obviously not going to do anything at the open. We're just going to wait and see. Selling sweet. Thanks, man. I appreciate that. That is kind of my heart in doing all this. I want to help more people, obviously. So we're going to see. Anybody's welcome for sure. So price is dropping immediately. Here is the midnight open. This is midnight open from 12 o'clock New York Standard Time. This is New York open. Just so you know what's on my chart. Price action before news. This is very common. These giant wicks with very small bodies, we ain't gonna touch. We're gonna stay far away from this crap. We don't want to mess with that. So while this is kind of working itself out, let's finish what we're doing. If I'm were to give an idea, kind of what I would want to see is this. Is something where we would break into the lows of this and then go higher. I would like to see something like that. So tag into this fair value gap again and then move higher. That's kind of what I would like to see. It could be the complete opposite. That's if we're bullish. If we're bearish, it's going to look more something. It could look something like this. Okay, that's on a weekly time frame. This is weekly. So still, we don't have enough context. We could go lower or we could go higher. We're going to do one or the other. We just don't know which one we're going to do first. So we need to drop down into a lower time frame. Let's go to the daily. See what the daily has. So the daily has wicked into this daily fair value gap yesterday. Now this is giving me context. I have more context here. Now that we've wicked up into this daily fair value gap, I am looking for something to go lower. That's kind of the context I see here. We pushed higher. We ran into this daily fair value gap sitting, this green box. All my daily fair value gaps are green. And then we have pushed lower, and we have these equal lows sitting right here, which is where? Right in line with this weekly fair value gap that we have, the unfilled fair value gap. So I think that's where I'm sitting right now. Is I think I want something bearish. Now, yesterday I was bearish, but if you look at price action, I said I was bearish right here. And we had this giant move. My mistake I made yesterday is I had the right bias. I did. I just tried to go short here and here. I just needed to let it work itself out. And then if I would have went short anywhere else the rest of the day, I would have been, I'd been in sitting in some green, that's for sure. But I didn't do that. So you cannot change your bias too quickly. I did that too quickly. I'm like, oh, we must be bullish. So I was bullish up here, and when we came down here, I tried to go long instead of sticking with my original bias, which was short. Lessons in the making right there. All right, so let's get back. Again, we're waiting for news. News is at 10. We got about 27 minutes before then. If something really shows itself, I will be interested, but right now, everything is looking, I'm not really interested. We got this nice wick that came down, then we filled it. Don't know. I just don't want it to run without me, obviously. We don't like that. We don't like running without. That's not polite. It's polite to let the person know what you're going to do and then do it. Good morning to everybody joining. Glad you're here. How'd your weekend go? What'd you guys do this weekend? Since we got 4th of July basically in the middle of the week, our city had a bunch of 4th of July stuff going on. So we took our kids to go see some fireworks, and dang, we were right under them, and it was like 20 minutes of just, you could like feel it in your chest, you know what I'm saying? It was fun. So daily time frame here, I think we go lower. Let's drop down to the 4-hour. 4-hour context. What context do we have? We have sell side right here. Let me remove some of these extra stuff. There is not a single 4-hour fair value gap in this leg. Okay? We have a 4-hour fair value gap sitting right here. I like that. With a swing low sitting inside it as well. So this is the 4-hour fair value gap I'm referring to. We have sell side inside of the fair value gap and nothing else unless we have these equal lows. So first target is the sell side, liquidity sitting in this 4-hour fair value gap, and then we have these equal lows. I think those are my obvious targets. Those are my obvious draws on liquidity. And so for me, I think what I'm going to be looking for is a setup to go short. What does that look like? I have two types of setups. I'm doing either an inversion on a fair value gap, or looking for a breaker to hit, as we see right here. See how that breaker was respected and we moved lower? This is the power of the breaker right there. I tell you what, breakers are beautiful. Now, I would have never taken this. Why? One, it's right off open, 9:32. And number two, we have news at 10 o'clock. So not going to be taking a breaker like that when it could go against me. I'm curious if it actually broke my rules of a 10 handle stop loss. So if I would have went short right there, my stop loss would have been at 10. And it would have respected it. Would have respected my stop loss, and it gave us almost 50 handles. You could literally make a living just off the breaker, folks. You can. You just got to know when to do it. And not all breakers do you want to take. You can't take every single breaker. Let me move this down here. This is a little far away. Make sure it's a little bit clearer. So thanks for joining me, guys, this morning. I'm looking forward to today. It's going to be a good day. It's going to be a great day of trading. We know how to read the market. We're going to read the market well. We're going to wait patiently for our setups because we are, as I say in my affirmation, I am a multi-million-dollar day trader. That is in my future. It will happen. Not quite there yet. I have a long ways to go for that one. But we're going to see it happen. So it looks like, let's continue our analysis. Prices looks like it's being aggressive to the upside right now. So we got our higher time frame analysis on the 4 hour. So now that we have the 4 hour ideas, let's drop down to the 1 hour. What does the 1 hour give us that can help us with narrative? Good morning, Con. Good morning, Justin. Dark Side, T-Man. All right, so we have this 1 hour fair value gap that's have been completely filled. And then this is interesting right here. We got equal highs sitting right this tiny fair value gap, this 1 hour fair value gap and a fair value gap up here. So we have a lower time frame target, equal highs. Now the question is, does it want to go for these lows, or these highs first? That's where we got to wait for news, number one. And if I had it my way, I would love for these highs to be broken first and then for us to drop. That's what I would want to see. I would be a fan of news hitting these equal highs, tagging this fair value gap, and then a drop. That's what that would be the nicest, because then we'd be in premium, and I'd like to go short in premium. What do I mean by premium? If you take from this leg, from this high to this low, look where equilibrium is. Equilibrium is sitting right above these equal highs, right in line with this fair value gap. That would be attractive for us to hit. We may not do that. That's just, I'm looking at all of the options to try to get a narrative that I am confident about, that I can execute on. So we're having this up and down price range before news. This is the kind of stuff I want to stay out of. You should not want to try to trade this. This trading is where you're going to lose your money. It's just up and down. You think, oh, it hit this breaker, it's going to go low. Then it looks like it's going the other way. Then it looks like it's going to continue lower. Just stay out. You just had to stay out. It's emotionally draining. Okay, it's probably going to grab, just wicked and grab these lows right here. See if it wants to push lower. We have these relatively equal lows sitting right here. And even if we were to take something, there is not an entry other than this breaker. Thanks, Thomas. Appreciate it. Glad you're here. Thanks for joining. Thanks for joining. Let's see if we can make some money together. But I'm not a financial advisor. Just gotta throw that out there. Probably gotta get a screenshot that flashes after I make money. Not a financial advisor. Not a financial advisor. Don't want anybody coming after me. This is more for entertainment. This is for education. All right, here's what I do like. I like this. I'm not going to take it, but this is an entry that I like. We grab these lows. We grab these lows down here. So we grab some liquidity. If we were to inverse this fair value gap, this is my inversion model. You would take this long to these highs and these highs. If you don't, if it does not close above this, you do not take it. Protection first, always. Yeah, you do not want to, this is just, if fair value gaps tend to support price. So if we come up into it, it will continue lower. So when it breaks and it closes, you have a full close above, not on, above this fair value gap. It's a signature in price that tells us price wants to move higher. So it is, and there's certain scenarios you don't take it on everyone, because if you look at this one right here, look at this fair value gap. This fair value gap, it broke above it. Did it go higher? No, it didn't. You can't take every inversion. There's very specific ones you have to take. Usually, fair value gaps after it grabs liquidity are the most intriguing, and the ones that are in discount. This is in discount, so this is interesting. This would be intriguing to take. We have news in 15 minutes. I guess it's far away enough from news that I may be interested in taking it. I have reduced my size for my risk, but my narrative, is lower. I'm looking at lower prices, so I'm probably not going to take that, and it's before news, so it's two things going against me. I'm probably going to just see how it plays out. But this is an example, if we close above this, what my model would look like. It would look even better if we grab this right here. This level right here, that level right there, and then grabbing it and running higher, that's even nicer. I would like that even more. So 1 hour narrative, we have these equal highs. We have these relatively equal lows. It looks like we're going to run and stab through. We'll see what happens at that point. And then let's drop down to the 15 minute. On my screen is the 1 minute, 5 minute, and 15 minute. It's what I have on my charts most times. And then I'll thumb through the 1 through 5 minute and the 30 second. And then occasionally I'll jump up to the 1 hour just to see what the higher time narrative is saying, to make sure I'm on side, because being on side is important. Way to go, Con. Yeah, it all depends on your rules. If you don't have a rule where you don't wait for news, then you can take the trade. I have instituted a loose rule of waiting till after news before I take anything. Unless it looks amazing. Nothing here looks absolutely amazing. Rarely does something look absolutely amazing, but as long as it's part of your rules, guys, the pathway to success. I was having a conversation with my son. He's 12 years old. He hasn't hit puberty yet. He's about to. And his legs are getting sore, muscle-wise. Like he's starting to build some muscle. There's the low right there. There's the low. All right, so we just tagged that. Let's see if we push lower. I was telling them that anything, because he was complaining because he didn't want to do drums, because he didn't want to play drums because he was sore and he didn't want to go to church and play for the church. And I told him that greatness is always on the other side of pain and fear. Greatness is always on the other side of pain and fear. And you have to overcome and you have to push through that pain and fear to be able to see success. Now, the pain for a lot of people is being disciplined enough to follow their own freaking rules. Man, it's easy when your mom and dad are saying, hey, don't do this or you're going to get a spanking, right, when you're growing up. But when you're your own boss and you tell yourself what to do, have you realized how hard it is to tell yourself not to do something and then follow through with it? It is painful. It's hard because you don't want to, or what you want to do what you feel like doing. But if you want to see success, you have to be willing to follow. Set rules and follow them. Set rules and follow them. Okay? If you don't, you will fail. I'm sorry. There's the low. All right, so we hit this swing low. That's a big target. On the sell side, that was one of my targets I did not want to hit before news, and we decided to hit it. So we're going to see what price wants to do now. I still have these big equal lows sitting way down here. And as you can see, we have the formation of a market maker sell model forming. So that's in line with my narrative. That's in line with my bias. I want to go short. We'll get an opportunity. There's no doubt in my mind. But it's for sure I want to move short. But you could, because we hit the sell side, you could easily take a long here. What is the 30 second? This is the 30 second. Got a swing high right here. You got a single fair value gap sitting right here. This is the obvious fair value gap. If we get an aggressive candle that closes above this fair value gap, I would be interested in that. But I would need to see lots of aggression for me to be interested in taking that right now. Because this is a major sell side. It's a big swing low. Let me go to the 4 hour. Right? So this is that swing low I'm referring to. This is the swing low on the 4 hour that we just hit. That's a big level. And we're in that 4 hour fair value gap. This 4 hour fair value gap. So unless we are just weak today, if we run these lows just in a straight shot, that's insane. We'll get some type of pullback, and that's really what we're looking for. Because I want to go short. I'm looking left right now, guys. You always have to be looking left to see where price is at. All right, so we have these 5-minute swing lows. This 5 minute right here. I'm just going to drop a horizontal line here. This is a swing low. So this swing low right here. We're really close to these. We're so close to news. And we're leaving this swing low, which is interesting. We have this is the 30-second we're looking at right now. This is considered an inversion. It's not an inversion we would take. The reason why is we have another inversion right here, another fair value gap right here. We want only one in a leg, or we want to take the highest one to a swing high. So you can't take this one. Even though it may work out, you may start seeing some aggression, because what did we do? We basically just collapsed through some swing lows, and we could see this go higher. But it's not something you want to take, because there's multiple here, and we could still go lower because we have this sell side sitting right here. Same concept with going short right here. You got one right here that if we close below this, we should run these lows right here. Okay, so let's see if we close. There's a close. We should run these lows. Now the trade would go, you would not close this trade unless you close above this box. So you have 15 seconds. Let's see what price does here. This is too low to actually take. We would not want to take this, and it's before news. I'm using it as an illustration on on one of the models that I take, okay? So it closed within it, so you'd still be in this trade. You only take it if it closes above this, right? This is only illustration purposes to give you an idea of what my inversion is. So we closed below it. You would be in the trade. You're still live. You would be so your entry would be right here. You're targeting right here, and you would close the trade as soon as you close above that. I don't know if it's going to work out or not. I'm just giving you guys an illustration. It's not a trade I would take because we have a fair value gap here and sell side sitting right here. We're too close to a sell side. So see how it wicked above it, but we did not close above it? That's a good sign that we're going to hit these lows. Now, because I'm not seeing any aggression to the downside, this is something that is I don't like that. You really want to see this move right away. We're still closing within it. You see that? But I'm not liking this price action. When I close below a level on an inversion, I want it to begin to move within 1 or 2 candles. I want it to move quickly in my favor. This consolidation is sus. I don't like it. I don't like it. So it'd be something I would be getting out of if this was a legit play. It still is a legit. It still is legit. It's still active because we haven't closed above it. But because we see this consolidation not going lower, I don't like that. But it's still a live play because it hasn't hit our stop loss. Once you're in a play, you leave your stop loss and you let it hit it. Six seconds. Let's see what it does. If it's going to close above or below. Still in it. This is the part of following your rules that's the hardest, is following your rules on when you close the trade and not getting freaked out. Good morning, Inner Trader. Yeah, we have a few more Few more. My last video did some stuff over the weekend. Still, it has not closed above. This is to teach you guys. This is to show you guys what my inversion is. This close will trade once we close above this. The idea, I'm not in the trade. This is the idea. And I think we're going to be stopped out here. You'd be stopped out here. I would close it now. That's what I'd be doing. So there it is. That is the trade not following through. Now, why didn't we take this in the first place? It's because we had sell side sitting here. We had another inversion sitting right here. And you would have gotten out because we didn't push lower. We really wanted to see it push lower. Okay? That's just to give you guys an illustration on a trade that didn't work out. Right? News is in 3 minutes. We got 3 minutes. All right. We got our 5 minute here. Looks like that breaker on a 1 minute turned out to be a great play. If you wanted to take it off the open before news, I'm not going to take that. Thanks, InterTrader. It's good to see the channel growing as well. I am grateful for that. And hopefully this helps people. This helps educate people. It inspires people to follow their rules. Guys, my biggest struggle was not following my rules. Getting emotional in my trades. And you cannot do that. Now, remember how I said after we hit this low, we may start seeing it go the other direction? That's exactly what happened. We purged some sell side a little bit more. We left this sell side here. This is now, the further we move away, the less relevant this becomes in my mind. But we're still 2 minutes before news. Let me see. We got to sell. Okay. So we have this swing high, we have that swing high we've already taken. Let's go to the 1 minute. I want to find, I think we might want to push up here a little bit. I can see us running to this midnight open. We got equal highs higher. My higher time frame bias is short. Ideally, I would love for a short, but we've already come in discount. We're in discount right now. So if I want to go short, we need to get into premium. Okay. What do I mean by that? I showed that before. If I look from this high to this low, here's equilibrium. I would want to be up in this area to go short at a minimum. At a minimum. If you're just joining, thanks for hanging out with us this morning. We're waiting for news here in 10 seconds, and then we will be free to trade. We'll be free to trade to start looking for a setup. My overall bias is short, but we are wanting to see. All right, so here's news. Let's see what happens here. Are we going to find support right here? Remember, this was our swing low. Are we going to find some, because that's technically, it could be considered a breaker, high, low, higher, high, break lower, hit this breaker, go short. Let's see what happens. Let me run to the 2 minute. Do we got any 2 minute? We got a 3 minute. Okay, we have a 3 minute inversion right here. 3 minute inversion towards these swing highs. We still got 3 minutes. We have to wait for that. So 2 minute wise, we have a 2 minute inversion right here that you could target these swing highs. We took a little retracement here and we pushed higher on the 30-second. Now, even if there's a setup, I want to talk about this here real quick. Patience is king. Patience is king. Even if there is a setup, if I don't like the setup, I will pass. I will pass on that setup to wait for a better one. I want A+ setups. So if something looks like, it could work out, do I really want to gamble, or do I want to wait for those, A+, absolutely obvious type of trades? That's what I want to. That's what I want to wait for. I don't want to risk capital on a maybe. Hey, let's see what happens, right? And I'm not trading huge size. I'm trading micro accounts. So I'm trading small size, and I'm still doing that. I remember when I would trade micro accounts and I was just, it's not a lot of money. Let's just see what happens. Let's see what happens. Let's see what happens. I was trigger happy. I overtraded and I didn't follow rules. That is the recipe for failure. And we are not failures here. We will excel at everything that we do. We will see success. All right, so we're finding, let's see we're right at equilibrium. Remember from this high to this low, here's equilibrium right here. I said that this is where we want to hit this level at least to potentially go short. There's not an entry option on the 1 minute. I don't like this one either. I would not take that either. Nothing's clearly obvious to me. We have a 15-minute fair value gap that I see here. I would like us to hit that. If you have a 15-minute time frame, it's sitting right there. 15-minute SIBI. So this is a 15-minute fair value gap. I'd love us to stab into that. If we want to go lower, that would be nice. All right, let's see if we get an explosion from this low right here, or from this fair value gap. I'd like to see this fair value gap supported and us to push higher. What I would have liked to see is us to come down a little bit more, leave a fair value gap, and then allow us to go higher. So if there was a fair value gap in here, we would have taken that long, but there isn't. So no opportunity yet. Where are you guys from? Where are you guys viewing from? I'm curious. Are you guys in the States? Are you guys on another continent? Where are you guys viewing from? Put in the comments where you guys are located. I'd love to hear. I've seen people in South Africa. We had people in the UK. People here in the States. Where you guys streaming from, or where are you guys watching from? Here's that support I'm talking about. I like this green candle here. It's causing it to start move a little bit. Let's see if it wants to move. Hungary, Washington, ATL, is that Atlanta? Indiana, Germany, Central Texas, Greece. Welcome, Peter. That's cool. What's the weather like in Greece? It's summertime here. What's it like in Greece, Peter? I'd have to assume it's similar for Germany, Con, right? What's the weather like in Germany as well? You went long. Where are you long from, Con? What minute? Summertime, okay. Perfect. So in regards to what this long, we had somebody say that they're going long. If you're going long from this fair value gap. Your stop loss would be below this, the low of the candle that created the fair value gap. So this candle's high and this candle's low has created this 1 minute fair value gap. So you can put your stop loss below this candle at 10 a.m. or you would put it below the 9:59 candle for your stop loss. And or once you inverse this fair value gap, I would be closing the trade. $10 a.m. Yep, got it. So we got a high, low, a higher high. If we see some aggression lower, this would be a nice breaker to take. I would really like that. Yeah, we already hit that. We're outside of that. I'm doing some technical analysis here, guys. I'm just looking at higher time frames. Right now I'm looking at the 1 hour to see, do we have anything in the 1 hour that would give me... No, I don't, Robert. I don't use fair value gap indicators because look at this. You got 1, 2, 3, 4 fair value gaps, and I wouldn't use any of these. I wouldn't use any of these fair value gaps personally. Which fair value gap do I like the most? This one right here. Because it's the fair value gap that found resistance the time before. So a break above this fair value gap will probably target these highs. So this is the fair value gap that I like. If I had to be picky on my fair value gaps, I don't want an indicator that's going to pull up, 1,700 fair value gaps for me to dissect. I use almost nothing on my charts. I put everything on my charts myself because I want to select the ones that I want to keep track of and what I want to watch. So I think that would be my first entry. I think I would consider going long here. I'll go long on that play to target these equal highs here, or these high and this high. Right now, I'm lightly interested in that, but I want to see some aggression, really. And as you can see, right after news, we have gotten nothing. Look at this. Look at that. I mean, it's just sideways right after news. This is why we wait. I mean, price action, unfortunately, was better before news. I mean, news right now is just sideways. All right, we did tag this 15-minute. You guys see that? We did hit this 15-minute fair value gap. So we could see a push lower. If we see a push lower from that 15-minute fair value gap, that would be ideal. I do like that as a breaker. All right, this is going to be our move, guys. I'm not in anything. I'm waiting for a retracement. This is my confirmation candle that we may want to move lower. Now, the only reason why it may not be is if the next candle, we retrace all of this progress. I'm not interested in that. I'm not interested in that because I would call that manipulation. Now, we closed below this fair value gap, and then we stabbed below this low. That was an entry. It would have been too small of an entry. I'm interested in the breaker specifically, so I didn't take this. Now let's go to a 2 minute. Here's a 2 minute. All right, your option could be this 2 minute right here. If we close below the 2 minute, you could target these swing lows. And the 2 minute closes in 25 seconds. We don't want it to go without us. You may have to jump in and run with it, but I'm not. I'm going to wait for it close. Let's see where it closes here. All right, we're going to get in short right there. Let's see if it wants to run against us or if it's going to continue to grab these lows. Target break even needs to be moved right there. All right, there's my target. I'm out for 60 ticks. We just hit that target right there and I'm out. There's our play, guys. Did you see that? All right, so that went really fast. It went really fast. I'm more than likely, it would have been very hard with the delay in YouTube to be able to hit that. Eventually, guys, and I apologize, we will be moving over. Once I hit a certain number of viewers, I'll be moving over to a Discord, which is going to be instantaneous. There's almost no delay, and it's way easier to communicate these types of things. So YouTube is a poor site for really teaching people execution and watching these things because it just sucks. All right, see how we hit that low and then we retraced? This is why we take profits there. Okay, this is why we take profits there. That was 15 handles, and I told you I got 60 ticks. 60 divided by 4 is 15. Okay, so that was the move. Let me confirm that actually showed up on my accounts. Yep, that's exactly right. That's a good day. That's a good day right there. I'm happy. So if we didn't get this breaker, we just had this massive candle. We saw the momentum, so we had to find where's our entry going to be. Okay, the inverse of this 2 minute, and then we close. Now we're continuing down. I don't trade multiple contracts. I have one single contract that I'm trading. I'm not scaling my size yet. And there's reason. Okay, so D Hunsworth, 60 ticks, but 15 handles. Okay, 15 handles. One handle is 4 ticks. So let me show you here. I'll show you here real quick. Okay, so I'm gonna go into a paper account. Okay, let's just say we want to go short one contract right here. Now I'm down or up. This tracker is ticks. That's every 25 cents. Okay, so it went 60 ticks in my direction, which comes out to be 15 handles. Okay. It doesn't keep track of handles, so it keeps track of ticks. So everything is ticks for me. I don't watch money. It does. It looks like about 5 points. I know. Here. Yeah, this was our entry. This is our target right there. So that's 15 handles and 62 ticks is what that was. Right? I know. Charts can be so deceptive sometimes. Because when you get a lot of volatility in NQ, to be able to get all this on the screen, each of these numbers is 10 handles. That's 10 handles. I mean, my cursor is 10 handles right there. The low and high of that cursor is 10 handles. It's legit. It's crazy. This can definitely move quite a bit. Okay, so I'm gonna get out of this real quick. Okay. So let me. I want to go over this trade here to articulate that. I think we still have lower prices. I think we still go lower, but we're a Monday, first day of the week, which is accumulation, and we got a full packed week next the rest of this week except Thursday. So it wouldn't surprise me if we do this break a low, retrace, break a low, retrace, break a low, retrace, and it just does this. It makes its way back. So you never want to go short here. You're just going to get stopped out on this retracement. Wait for the retracement, and then you'd go, and then you'd want again for a short. As long as you have your bias right. If you have your bias right, it's going to be a lot easier. So, what was I looking for? I really wanted this breaker on the 1 minute. The 1 minute breaker looked fantastic right now. Now, this breaker is still in play. This breaker is still in play. What I would like to see is something like this. That's what I would like to see. Us coming into this breaker right here would be something I would like for a continued move lower, because I do think we have lower prices, ideally running for these equal lows sitting down here. Okay, so we got equal lows sitting right here. That's what I would like to see. It doesn't mean it will happen, but this breaker is still in play. So we didn't get this breaker on the initial push, and we saw this huge down close candle, just two of them right in a row. Two solid down close candles. And as you can see, we didn't have a clear and obvious fair value gap for price to stop at. So then you have to thumb through the timelines. Okay? Go to a higher timeline. This is a 2 minute. I'm like, oh, this is an obvious 2 minute. If we close below that, we should run for these lows. So we went short on the close. Stop would have been above this fair value gap here. It would have been a large stop loss, but because of this large candle, I'm just like, we're going to hit these lows. It's obvious to me. We hit the low and then you get out, or you move your stop to break even. Did you take those sells with ES equal lows? I did not look at what ES was going on with ES. I was looking at NQs equal lows that are way down here. IO or Ryuk, sorry, Ryuk. My bias was short because of these equal lows, and we had a market maker sell model. So look at this, look at price action right now. Okay, I'm done. I'm not going to be trading anymore. Look at this, how we're hitting that breaker right now. Okay, this is very aggressive, so we don't want to take it right here. We want to see price actually play out a little bit more. Let's see if price wants to close above this, because if price close above that 1 minute fair value gap sitting right here, that would invalidate the trade idea. And if we close above this, I would be taking that to this high, 100%. But then we have 29 seconds. And see how it just went right through it? So this breaker is irrelevant, right? That breaker is irrelevant. I'm not interested in that breaker unless we close back down here in 16 seconds. But this aggression tells me we have a better chance of running for this high. Okay, we're not closing above this fair value gap, so there's no trade idea. Okay, we closed right on it. That sucks. Oh, we closed right below it, so no trade. You do not want to go long right there. You do not want to go long because you could get this to retrace. It still could run it, and if it does run, it will run without us. It will run without us because it closed below. I mean, I'm zooming in really close. See where the close is? See where the box is? It did not close below it. So there's not a trade idea. Okay? You would have to wait still 26 seconds for price to close above this. Then you would target this swing high. Okay? So I'm going to play this out on a paper account. If it closes, I'll do this for you guys, and we'll see this play out. The last one was just way too fast, and it didn't give us an opportunity. 6 seconds, and it's not closing. It did not close above it. 10:50 macro is a good time to wait, Masato. I usually do all my trades. Most of my trades are in the macros, and my macros are actually 10:45 to 11:15. I like to go 10. I just noticed that if you bring it 5 minutes more, 5 minutes lower, you'll see highs and lows made all the time between that 15 minutes before and 15 minutes after. I just think it lines up with time and price more accurately, in my opinion. So technically, price is respecting this breaker so far. Price is closed within this breaker. So I'm keeping an eye on this, even though I don't like it nearly as much. This price has respected this breaker, and I want to see what happens with price. I think we're going to have some type of consolidation, like Masato said, until about 10:45. Because look at this price action. We went aggressively lower, and then we went aggressively higher, and then we stopped. So far, that's a lot of movement. It needs to accumulate orders before it's going to move anymore. Okay, so we have 28 seconds. If we close above this, I think we have a good chance of running for these highs. If it closes above this candle, or if we run above this candle, I think this idea is gonna be gone here. I think we're gonna miss it. Yeah. Unfortunately, this ran without us. It did not give us the close or the entry on that inversion, which is okay. It is fine because we will get another one. There will be another one. We made a SMT low with Friday's low, but why did it invalidate to go higher? We made SMT low with Friday's low. I'm not exactly sure I'm understanding. Let's see. 1 minute and 1 minute. Okay. So we made lower low with Friday's low. So at this low, we ran the lows on ES, and on Friday, we ran the lows also on Friday. We ran Friday's lows as well. So I'm not exactly understanding what you're saying, Ryuk. This is my next level of interest right here. We are getting a little high in the range, but if we continue to see this type of aggression moving higher, we should run this high and this high here. No breaker. There's a breaker here. I just don't like it. I don't like that. I'm not interested in that. If you want to reword that, Ryuk, maybe I can answer your question, but I'm not, based on what I'm seeing, I'm not understanding what you're saying. We should see support here. We should continue higher, just based on me seeing price action. We made a low, high, lower low. This technically is a breaker right here, a bullish breaker. This would be the body of a bullish breaker. I would want to see price be supported here after this aggression and continue higher. We are before macro, so we could see some consolidation around this area, which is very common to do. So if you're thinking it's going to come in here and it's just going to continue to shoot higher, that's not how price always moves. It wants to accumulate orders from time to time, and then it's going to move. So if you look at this, we have our accumulation or consolidation. We have our manipulation. Now we have our distribution. Now, does it want to continue to distribute higher? I think so. I think that's where price is going to go, but I could be wrong. We have to see our models show up in price to give us that confirmation that price wants to move. This is one of those. We have a breaker here, and we have this fair value gap here. This fair value gap has held price down once before, so I really want to see it close above this fair value gap to be confident that we want to move higher. So it's partially mitigated. Wait, 9. No. Let me jump to the 15 minute and I'll show you the 15 minute. This is our 15-minute candle here, right? It's partially mitigated by this candle. But after we went into this on the previous candle, we made a low and we grabbed liquidity. So it did its job. Us going into this 15-minute candle or fair value gap pushed it lower to a target. That target in my mind was this swing low. Was this low from way over here. This low right here. See that low? That was what pushed price lower. Now, it could still find resistance here, and it still can come fill this fair value gap if it wants to. So, it was partially, to answer your question, I think it was partially mitigated. Friday's low and today's 950 low made an SMT. So why did it invalidate to go higher? That is what we're looking for. SMTs is a signature in price that, in line with other models, with other PD arrays, will tell us price wants to go the other direction. So if there's an SMT on the sell side, it means price may want to go higher. If there's an SMT on the buy side, on the top, that means price may want to go lower. So SMTs is a signature in price where it's not correlating between the indices. That indicates that price may want to move in the opposite direction. And so we want to begin to look for our PD arrays for confirmation of that. So our confirmation was for a move higher really was a close above this fair value gap. We eventually did, and now hang on. I'm jumping ahead of my conversation here. So let's see, 950. I think you need to look closer together, Ryuk, on your. I don't like using SMTs from that far away. I like to use the 5, 10, and 15, or the 1, 5, and 15 minute on my when I'm looking at the charts, when I'm looking at the indices, when I'm looking for correlation. So I'm looking right now at the 1 minute. So I'm not seeing any SMTs here. I don't like using SMTs from the previous day. I want to see in price action right now. Other people may do that. I just don't. I don't put that much weight into it. SMTs sometimes do mislead. That's why you cannot go long or short based off an SMT alone. I like this wick into this breaker. The breaker has been supporting price. Do you see that? But do you see how it's been consolidating like I thought it might? So we might see a little bit of animation because we're at 10:30 right now. Typically around 10:30, I see a bolt in price action, a quick move, and then it slows down until the macro. Do you recognize, Robert? Do you recognize candle wicks, or are you only going by where the candle closes? I do both. I do both, but in relation to my model for the inversion, I'm specifically looking at the bodies. I do not care about the wicks. I'm looking at the bodies for my inversion. I look at wicks for other reasons. So, for example, this candle right here, we wicked above this high, okay? But we closed lower. So I'm using the wick and the body to give narrative that price may want to move lower a little bit because we didn't make a higher high with the body. The wick did. It grabbed the liquidity, but it didn't. So what did it do? It came down, grabbed a little bit of liquidity right here, and now we're in consolidation. So I look at both wicks and bodies, but I use bodies for some things and I'll use wicks for other things. Now, off the top of my head, I can't think of every single thing right at the moment, but as I go through it, I'll mention it as we go through what I'm looking at as far as the wicks and the bodies go. That is true. Masato, he does ignore that. He wants the SMT to be in line with the market. So for me, I'm bearish on the day. Even though we have this aggressive price action higher, I'm bearish. And we could run these equal highs. We have these equal highs sitting right here. Relatively equal highs. And equal highs sitting up here as well. That still means price could want to run these equal highs and then continue lower, and that would be totally allowable for a market maker sell model. If this commentary is helpful, guys, consider giving a like. Give the stream a like. I'd really appreciate it. I'm happy to answer anybody's questions as we kind of wait for price to formulate and give us an idea where it wants to go. I still think it wants to go higher, and I like this consolidation. So here's what I would potentially wouldn't mind seeing. We do this consolidation gig going up and down. We manipulate lower real quick, and then we close above this. That is what I would want to see. Okay. While we sit here and wait for a second, I got to answer this phone call, so give me a second. Sorry about that, guys. JP, welcome. Glad that you're here. You are welcome for all the breakdown. All right, look what just happened. We had some manipulation lower. You guys see that? That's kind of any time that I'm sitting in price, I'm coming up with ideas. What do I want to see price do? Now the question is, now that we went lower, are we going to go higher? Right? I really want to close above this. That would be an indication for a long. If it gives us another long lower, that may be interesting, intriguing as well. But right now, we're just seeing if price wants to do with the idea that I'm putting together that would give me the confidence to take a trade. Now, I'm done for the day. I made my one trade. I got 15 handles. I'm happy with it. I'm only doing paper trading at the moment with you guys. And we're going to see if price wants to, actually, I want to drop to the 30 second real quick. Okay, there is not an entry here in the 30 second. So at this point, we're just waiting for something to give us an opportunity for an entry. But do you see how we manipulated lower and then we're getting aggressive? That's what I'm talking about. Okay, we got 30 second here. Shoot. I don't like the 30 second. See how this 30 second has a fair value gap here, here, and here? Can't do that. You got to go up. You got to go up to the next time frame. Here's the 1 minute. Okay? So we really want to see a close above this if we have any shot at going long. And it would look something like this. That's what it would look like. Something like that. Now, going back to you, Robert, see how this wick went higher, but the body closed in line with all this consolidation? I call that manipulation. That is a sign that price might not be ready for a breakout. So there I'm using the wick again, and I'm using the close of the body. I'm using both of them. It grabbed the liquidity, but went back down into the range. This candle right here closed a full body with very little wick, which can indicate to people, hey, this may be going lower, but then what does it do? It goes the other way immediately. So now that this body closed within this consolidation and didn't go higher, my question is, do we want to go higher? Are we going to continue to consolidate, or was this another manipulation and the real move is back lower? Now my bias is short. I want lower prices. But, I mean, I don't see there's no opportunity here for me to go short. There's not I don't see my model anywhere in this price action that would indicate to me to go short when it starts moving. I mean, if it starts moving aggressively, there isn't an entry for me here. We have a high, low, higher high for a breaker right here. So if price comes back up to here, I may go short. So that might be an option. But right now we're still in consolidation. I use Apex, JP, to answer your other question. I use Apex's trade copier as well. It was $150 one-time fee. To me, that's worth it. I like the idea of only a one-time fee. So, and then all my funded accounts are lifetime accounts. So I buy them once. As long as I manage my risk, I don't go on tilt, and I don't overtrade, I should not be blowing those accounts. And I have 8 of them right now. My goal is to build them up. All right, so we had that fake move with the wick, bodies closed in, and now we are moving lower. We just closed. We didn't even close there, and we already grabbed that low, so that sucks there. No opportunity on this fair value gap for an inversion either. Look at that close. Look at that. Okay. So we have this inversion right here. Let's see what happens here. Do you got a 30 second in here? Not really. Not really. This full body candle closed right below this swing low. And then this swing low grabs, it runs that swing low really quick, and then it moves the other direction. I'm watching on how price moves, because as you guys become more familiar with how price is moving, it will start telling you a story. And that's really what we want to do, is we want to identify the story on what's going on with price, and then wait for our setups. It just, over time, it gets easier and easier. You just got to be willing to put in the work for a little bit. I've been studying ICT's concepts for about 15 months. 15 months now. Okay, so here's what I see right now. I like this breaker sitting right here. Okay. The reason why I like this breaker, we got a fair value gap to the left of it, right here as well. And we have a bearish order block. So price may not come all the way back up to this, but we got this bearish order block. And as long as we close low right here, if we come back up into this order block, that would be interesting for a short. And we're close to the macro time. I would prefer to wait for the macro time. So I would be a little patient because I don't want this to be another manipulation. So we want to see how it reacts right here. The last 10 seconds are going to tell us the story. Still very strong. I'm not. We're going to let that one slide. See how we have to wait. We want to wait for the close to see how the candle looks. I don't like how strong, how it filled the whole thing right now. We could grab this real quick and then run lower. But I want to wait to see price form a little bit more. That sucks, JP. So sorry about that. So I mean, I've had that kind of stuff happen in the past, and it is so discouraging. It's so frustrating. However, I will say this: the opposite will also happen too. I've gotten in trades, didn't know it, and found out I was up $1,500. And I'm like, holy crap! Exit, get out. All right, right here, I like this. As long as we find resistance there, I would be interested in a short right there. I'm gonna take a position there. I'm gonna put a stop loss at 10 handles. So that would be right around there. Let's see if it wants to be aggressive, and it's gonna stop me out. Yeah, I'm not liking this price action. I think we're bearish. It's just not. It's not shaping up the way I like. I like this close, and I was like, well, if we come back up into this and we find resistance, I'll take it. It did it initially, and then it pushed through it. Can't do much about it, guys. Stuff like that happens. Yeah, I mean, you're going to get it. It's going to happen both ways, JP. You're going to have those moments, it just like it's crushing, a crushing feeling. And then other days you're going to be like, I can do no wrong. This is amazing. Ha! Thank you, Lord. Oh, man. And the days you can get out like that, you're like, thank you, Jesus. Thank you. You know. All right, so we're still in this icky consolidation. We just hit the macro time of 10:45, so I want to see price begin to move. What is the macro time? The macro time for me is when price has a higher probability of running and not faking out. So you see how I tried to go short right here and it faked us out? Well, as we are in the macro time, there's a lower probability of that happening. it will actually begin to run in the whatever direction. We just want to make sure we're on the right side of the move. So technically, we're still in this breaker right here. Price has been respecting this breaker for the most part. We want to. This is the low of the breaker. We want to see if price wants to continue lower, or if we're just gonna do this bounce and start moving higher. Let's see what we got up here. Initial consolidation, we got it lower. We could, oh, that could be. This could be an intermediate term low. Let's see if price wants to, we're still not 100% sure on where price wants to go. It's 50-50. Honestly, this price action is 50-50 right now. We could go higher. We could go lower. I like these equal highs right here. There's just not an entry for us to get into it. There's not a manipulation leg. There's not a fair value gap for us to do this, but it will probably just, punch right through this, grab the liquidity. And the question is it going to close with a full body, or is it going to wick back down? All right, so we got this macro time. Let's see what happens here. So there's that push that I told you is probably going to happen. Now what are we waiting for? How is this body going to close? Are we going to get a full body, or are we going to get just another manipulation? This is the 1 minute. Back to the 30-second here. Just going between the two. I want to see what price is doing. Here's 2M. 3M. Yeah, I mean, it's literally, we could 50-50 either way at the moment. I like this wick. We respected the breaker. We're probably going to run these lows. We're probably going to run at least this low. Especially after that manipulation. I want to see this. I want to see this breaker find resistance with price. Yeah, and then we got these equal lows here. Yeah, I'm going in way too late. I should have got in at the breaker, but we should be running these equal lows. Oh, son of a gun. That was the wrong one. I hit the stop loss instead. TP would be right here. Sorry, guys. So you would have wanted got in up here at the breaker. That's where you would have wanted got in at. Your stop loss would be sitting somewhere around here to protect your position at 10 handles above or so. And we want to see if price wants to run these to these lows here. I got a horrible feel. Your position would be somewhere around here. Wanted to see price find resistance on that. Look at that horrible price action, man. Today is not the day, guys. I would not be trading today. This is not good price action. Price action does not do that. Price action does not do that. on good trading days. Here's your inversion, closed above it. Let's see if it wants to run this high right here. If it doesn't run this high, this is the days that you do not want to trade, because we swept this low and we swept this low and we just inversed this. Okay? This is a legitimate setup. If we don't run that high, this is price action we want to stay completely out of. Good morning, Jesse. How you doing, my friend? How you doing? Glad to have you. All right, see how it just closed below it? This is price action. As soon as you can recognize bad price action, you should be getting off the stream. You guys just be done for the day, or at least for the morning session. This price action is horrible, right? We wanted to go short. Price reverses against us. It makes an inversion. We should run these highs. It doesn't. It continues lower. I mean, our bias is right so far. My bias is to go short, but every entry, price action is just moving too far against us. It's moving too far against us. It is a indication that price action is just not A+ price action today. This is B-. This is B- price action. You can tell just by the way this looks. We're in a macro time too. I mean, it's crappy price action, folks. Crappy. This is why being one and done, getting that trade and being out, that's really the best. You find that one trade where you can get your win, walk away, especially if you start seeing stuff like this. Be done for the day. I watched a video. There's this guy, he does investigative stuff, and he was trying to expose all these day traders. You know, all these fake gurus that are out there. And I like his stuff. I think he's honest and he's trying to do a good job. But he's like, well, if you found the market and you know how to make money, why are you only taking, 2 trades a day? You don't understand, because you're not a day trader. You're not a day trader. The longer you're in the market, the less trades you want to take, because the price is just it can manipulate. So we're getting that lower move like I planned. We've still have been, here's respecting, oh, that's a bullish breaker. We still have been respecting this breaker. You just have to have a higher tolerance for manipulation. So this entire block is your manipulation block, or is your breaker. Okay, so look at that and look at the context of it. This is why I wanted to go short. Do you guys see that? So price action is still respecting the model, respecting order flow, but the way price is moving is just very, very hard to manage. Okay? You would have been in this trade from 1039. So for about 10 minutes having to deal with this manipulation, and this one little candle right here wicks above it. And if you put your hard stop loss right above it, right above this breaker, you would have been stopped out, and then it moves in your favor. So while it respected it, this is a type of trade you just want to stay away from completely, and you just want to wait for a better day. Because guys, I've seen breakers that run beautifully. That just have nice order flow. This is very choppy, very slow, very emotionally driven. It messes with your emotions. Look, right now you're like, oh, is it going to run against me? Right? And who knows, right? Just Not fun price action at all. High resistance, 100%. High resistance, high resistance. What is the high resistance Masato is talking about? It is these candles right here. Boom to boom, right there. Let's clean up the charts a little bit. Let's get rid of this 4 hour. We don't need that. We've already grabbed that liquidity. All right. So this is our breaker, right? Breaker sitting right here. We went below it. We came back up into it. You go short. You get manipulated in, out. It doesn't matter. Look at all these fair value gaps sitting right here. Okay? Find support on this fair value gap. We go back up. Find support on this fair value gap. We go back up. Now, the next one is this one. We might find it might come back down and hit this fair value gap and then go back up. So all these fair value gaps can potentially be points of resistance, creating a high resistance liquidity run. Yeah. Oh, 100% JP. 100%. This is why being patient and taking only the best of the best that look the best of the best is worth your time. Now, I'm interested in seeing this breaker hold again, at least the full body of it, the body of the breaker, right? That's really what I would like to see. But we'll see if price wants to do that. We're still re-delivering off of this 15-minute. We came back up higher into it. Do we got anything else? What does the 1 hour look like? Honestly, we have reason to go lower, guys. We really do. We really do. Here's a 1 hour swing low right there. And it overlaps with a 1 hour fair value gap, which is also a BPR. And it looks like we tagged that fair value gap a little bit. So we got this 1 hour fair value gap and a swing low sitting right here. I don't know when it wants to run them. We don't know when, but it will. It will hit these. We just don't know if it wants to come back up and tag these equal highs, or if we want to respect these, if we want to respect this and then continue lower. Equilibrium is sitting right in between these equal highs and equal lows, or these two equal highs. So we are in discount. We are in discount. Yeah, JP, if this is what, staying out, this is the hardest part, is staying out of the market when you got crap price action. Number one thing you got to be able to do. Can you recognize, do you know what good price action looks like? And do you know what bad price action looks like? Okay? You need to be able to tell the difference. So what you can do is you can go back in previous days, find your setups in bad markets and good markets, and look at what price looks like. Look what order flow looks like. Be able to distinguish what bad looks like and what good looks like, and then build that confidence to be able to, then you move to stage 2, and that is being able to recognize it and then choosing to say, I'm going to stay out and wait for a better day. That will protect your profits. Yes, it makes your progress seem slower, but it will be faster because you will not be losing money on these types of days. Thanks, BF. What's happening, my friend? One of the OGs. Thanks for being here, man. Okay, look what we did again. Look at this. Look at this. Look at this. Breaker. This is a legit breaker happening in full view. We're respecting it again, and we're moving away from it. Now, how much are we going to move away? We don't know, but we just see price doing this. I have a video on my channel. I think it's something called the Magic Box or something like that. It's a mechanical breaker. I don't use it that often, but you can use that strategy on price action like this when you find a legitimate breaker. And that is every time we come up into that breaker, you go short for 10 handles. So you would go short here for 10 handles. It would come up in here. You go short again for 10 handles, short again for 10 handles, short again for 10 handles, short again for 10 handles. Right? The only thing I don't like is that this is a 15, 16 handle area where you'd have to work for your stop loss. It's a bigger stop loss, so you'd have to hold through more drawdown. But this would have given us 1, 2, 3, 4, 5 wins on your breaker. I had a great weekend. BF. We what did we do? We did some more fishing. What else did we do? We went bike riding with the family. Got my son a bike. He's been needing one, so we went bike riding. What else did we do? We for the 4th of July, we're renting some jet skis. We're gonna be going on the lake and riding some jet skis. It's supposed to rain on the 4th, so we might be going day before or day after. Not 100% sure yet. Well, I will say, JP, if you're trying to move away from scalping, I may not be your man. I may not be your guy. I am a day trader, and I look for 10 handle moves. This is my strategy in a nutshell, JP. My strategy is to get 10 to 20 handles and get out of the market, close my accounts, and walk away. 10 to 20 handles on 10 accounts is $2,000 to $4,000 with one mini. With one mini, it's $2,000 to $4,000, and that is all I need. And as I go up to 20 accounts, that's $4,000 to $8,000. It is so doable to get 10 handles on the Nasdaq. So doable. Now, I'm not at a point where I'm able to do what ICT does, and he holds for these giant 50 handle, 70 handle, 100 handle moves. I'm not there yet. Where I'm at on my own trading journey, and you would have seen if you go to my channel on the main page, you'll see my day one, my journey video on where I'm starting. Where I'm at currently is I'm building up these accounts, and I'm looking to get 10 to 20 handles one time, just be done. I got that today. I get that most days. And if you can be patient enough and wait for those 10 handle setups, that's all you need. And here's my opinion, trying to go for those bigger moves initially, I think, is going to bring more frustration, more confusion, because you're like, what's happening? Why didn't it do what I wanted? Instead of just building that confidence and building your account by getting those 10 to 20 handles and getting in and out and being done. Once you can do that consistently, I think it's easier to scalp 10 handles than it is to hold to get 100 handles. So I'm going to get those 10 handles. I'm going to be consistent. And then as I build my size up and I go from 1 contract to 2 contracts on these copied accounts, then I'll sell one contract at my first TP of 10 handles or 20 handles, and then I'll hold for the 30 handle move and stop out at break even. That's how I'm building up, and I have become okay with it. I was at the place where you were at, GP, where it's like, oh, I want to get these big moves. I need to, that's where I need to get. And I've just become okay. Get my handles, get out, build my account, get my accounts in a buffer where I can take 2 contracts and then sell one at my first TP, hold for my second TP, and move my stop to break even. That is my strategy. That is my plan in a nutshell. Masato, it is so doable. And here's the other thing about that. You have to believe that what you're going to do is, number one, possible, and that number two, that you could do it. Like anybody could do that. And I honestly believe anybody can get 10 handles. And you might not be at the spot where you can get 10 handles yet. That's okay. It takes time sitting in front of the charts and watching price action and being patient and waiting for your model to set up and being consistent at following your rules, and then you will begin to see progress. Yeah, there's been a bunch of stages along the way that I've seen loads of improvement, and it just takes time, and it's a little bit at a time. And if you can see the end result, you can have the discipline to be disciplined until you get there. So I see the possibility of getting 10 to 20 handles. It's so doable. And I'm so convinced on it that I'm going to wait for those perfect setups, and then I'm going to take it, I'm going to get my money, and I'm going to get out. I'm going to take what the market offers me, and then I'm going to get out. I'm not going to try to, tear the market up and constantly trying to get 10 multiple times. Like I said in this mechanical breaker model, where you could have gotten, 10 handles 1, 2, 3, 4, 5, 6, potentially now 7 times. I'm only going to take 1. I just want my 10 handles and I want to get out. Until I have more exposure to the market, I'm in front of the charts more, I build that confidence up more, all those things, right? There's so many factors you got to consider that going for those small, low-hanging fruit wins is legit, man. It's the place to start. There's more than one way to trade, so there's other people that would say, no, I wouldn't do that at all. I would start on the higher time frame, just focus on the 1 hour and the 15 minute. Okay. You guys are on my stream. I'm going to tell you what I believe. And so I truly believe that. There's other ways. There's not one right way. You just got to pick the way that you believe the most. Freaking stick to it. Don't change. Don't go to somewhere else. Don't find something else. Stick to it. Anna, how you doing? So bullish wedge. I don't do bullish wedges. I don't do that type of retail concepts. What I do see is low resistance liquidity. I see low resistance liquidity that price may want to run and grab, but I also see these equal lows and this fair value gap that price might want to stab into first. If price does do that, we may get a manipulation to run higher, or we might run all the way through it. Okay? Do not bullish wedges. Set up for failure. Set up, because where do you get in at? Where do you get in? You don't know. Right? Well, let's see where this candle wants to close. Does it just wick higher and then the body close back down? Well, now you're like, oh, maybe it wants to go short. Well, maybe it just wants to wick below, grab the liquidity here, and then it continues higher. So whether or not it's a bullish wedge, we have to figure out what is our entry model. Right here, I don't see. Can you hear it now? Tell me if that's better. I apologize if it's low. Do you see an entry model here? I don't see an entry model here. I see a liquidity run where price is going to grab these, and that's exactly what's happening right now. It's wicking above these to grab the liquidity here. The next question I have is, do we want to, okay, I think we're done with this breaker, so I'm going to move out of this breaker, and I'm going to put this on this 1 minute fair value, this 30-second fair value gap. I like this 30-second fair value gap. Price is being aggressive right here. Now, does it want to stop here, or does it want to change directions? So as far as your analysis, this technically was your bullish wedge, but where's your entry? You just don't have one. I don't see one that I'm personally taking, and you have to be consistent on your entry model. See how we hit the consequent encroachment of that fair value gap to the tick? That's a signature in price. Staying below staying in the discount portion of that fair value gap may mean we're finding resistance here and not wanting to continue higher. Now it could just blow right through this on the next candle. That's why it's a dynamic. We're watching price action one candle at a time. Ultimately, we're looking for a close above this to go long. I think we could go long here. I like the idea of going long, targeting this high. Peter, that wedgie thingy? We'll see what price wants to do here. And then I'm probably going to call it a day, guys. I got other responsibilities I got to take care of. I will not be on tomorrow, but I will be on Wednesday and Friday. And then the following week, I'll be on Monday and Tuesday. And then Wednesday through the rest of the week, I probably won't be able to trade because I'm going on a vacation with my family. All right, so we closed above this. Let's take that as a long. Okay, we closed above this. We put our stop loss at the low right here, so a close below that, and then we're looking for a take profit at that swing high. Okay, this is aggressive price action. I like it. We closed above just like I marked out. Now we want to see price continue this aggression and move to this target of basically 15 handles again. Okay. Let's see price. I'd love for it to just pump right through that. Now, once we hit this level, you have two options. You can close the trade. You can take some, you have three options. You can close the trade, you can take some off, and then you want to move your stop to break even as soon as we hit that level. Okay? So we haven't hit that level yet. We will want to take that off as soon as we hit that high. It's good. I'm liking this reaction here. Let's get a little tighter here. We want to see it support this fair value gap. It could still wick down in here. I really don't want it to do that. I want to look at the 1 minute. What does the 1 minute look like? It's just a wick. Okay, so I don't see reason why we should retrace unless price action continues to be this crappy price action that we've been seeing. It's a close below this
is the technical answer. So I'm going to move this a little bit lower. And if we close below this box, then I'm closing the trade. Okay, because all we did was just wick into this right now, and the body is moving back up. I like to see that. I want to see it close above this, ideally, completely. This is a paper account. So this is a paper trade. I already did my trade for today, and their paper account allows you to do this. If I'm doing my Apex accounts, I cannot do this. Trading my Apex accounts, I can't do this at all. So this is a paper trade. Now, as soon as we break above this high that we created, we will move our stop to break even. This is our new internal high that was created. We want to move our stop to break even as soon as we hit that. Okay? Even though this was our target for our break even, we now have a new target for our break even is as soon as we get above this candle here. Because we do not want to wick above this candle and then retrace. See how price has been playing on the top half of this fair value gap? That's a good sign. This wick, that's subjective. We don't want it to close in here. We don't want it to continue creeping down. We really want it to start moving. I think it should. As soon as we get above this high here, we're moving our stop to break even. I hate this type of price action, man. Just got to follow the rules. I mean, this is an obvious. This is so obvious. I mean, if this doesn't work, like I said, it's because of the freaking price action. It's because of it being a Monday and just a wonky, not as crappy price action that's sitting all in here. I still like how we're respecting the top half of this fair value gap. Come on. Don't give me this crap. We're making more low resistance liquidity. We're still playing in this fair value gap that's sitting right here too. Remember that there's a fair value gap right here. So this fair value gap is all right here as well. We just use our entry as this inversion sitting over here. Come on. Let's run this. Come on. See that it's just continuing this. I hate this. Come on. You got to be patient. Got to follow the rules. Close below this and we're out. We got 14 seconds. And 3, 2, out. That's just stupid. This is, like I said, remember, this is the price action. When you see this, guys, you stay out. Not a good day. Not a good day for trading in general. If you go onto Twitter, either you'll see fewer people trade or post their wins, or you'll see people just focus on the only win or the good move of the day. And that good move was, what trade did we take? I can't even remember the trade that I took. Oh, we took this short right here. We took this short we had this breaker. We took the 2-minute inversion to the downside. And we took that trade. So, guys, I'm going to be done for today. I got some things I got to get done. I will see you guys Wednesday. Wednesday morning, I will be back on. Look forward to seeing you guys. We will talk to you guys.